Over the last few months, the property market has just been booming. Prices have been rising so quickly to reach their recent all-time high. However, all is about to change. And does that mean the boom is now over? During quarter 2 and quarter 3 of 2021, house prices rose really quickly, and there's been a number of factors that really contributed towards that growth and kept those prices pushing up and up and up. The main primary driver initially was the stamp duty holiday, which meant that they're actually on the larger transaction there was no stamp duty to pay, and so the government's trying to stimulate the market and keep things moving. And of course, there are a lot of other things happening as well. People had been in lockdown, they were saving money, they're not spending as much money as they would ordinarily, especially on the larger purchases. And of course, people being locked down at home, more people are thinking about maybe we need a bit more space, maybe we should be moving, maybe we need somewhere with maybe some garden space as well. All these things also meant that demand started to increase. But because so many people were locked down, many people were thinking they don't necessarily want to put their property on the market, they don't want people traipsing through it, looking at it, especially when there was so much uncertainty around the virus as well. So that meant the stock in the market was quite limited. With limited stock and demand starting to increase, of course what happens, prices start to rise. And then the government is doing a number of other things. For example, there's furlough, so people are sitting at home earning money but not necessarily actually doing any work. So furlough money supported individuals and businesses alike. Businesses also had other grants and support as well to just keep the economy going and keep things moving. So the government was pouring huge amounts of money into the economy because it really didn't want it to collapse. And of course, this has a big impact on the property market, because if there's more money around and that starts creating some demand, that means house prices are being pushed up. And then when we're buying property, one of the key things that we need to be able to do is often be able to leverage that money, i.e. be able to take on a mortgage to be able to purchase property. And mortgage interest rates have been their lowest that they've ever been. So it's never been so cheap to be able to borrow to be able to buy. Then of course it depends how much you can borrow. Then of course the government throws into the mix 95% mortgages, meaning that you can borrow even more money than you would have ordinarily, especially for first-time buyers. Now all these things have been stimulating the market, they've been pushing the market and really been driving those prices up. Of course, some of this becomes self-fulfilling because people see that actually prices are rising. That creates confidence that maybe wouldn't have been there in the market ordinarily. So confidence starts to reappear in the market as well. And one other thing the government has recently done is starting to relax the rules around planning, in terms of what planning approvals and permissions we need to be able to make changes to property and what uses that a property can actually have. So when we put all these things into the mix, you can start seeing there's a lot of little factors that overall have contributed towards driving house prices up and demand up for these particular property. But what's now changed? Well, with property prices reaching an all-time high, this also really stretches the affordability in terms of an individual or a couple's ability to be able to buy what they can, and their spending power is limited as well. So what this does, it causes somewhat of a slowdown in the market. There's also still a limited amount of stock that's in the market. There isn't a huge amount of availability of properties. The other big changes are the stamp duty holiday has come to an end at the end of September, and also furlough payments have also come to an end at the end of September as well. Now when we roll the clock back about say a year and a half ago, myself and many other people were saying, hey, look what's happening right now with the crisis. That looks like if it unfolds the way we thought it was going to, the market's just going to crash out completely. It's going to tank, prices are going to drop. There's going to be a huge amount of distressed sellers in the marketplace just trying to exit out of their properties. There's going to be a huge amount of distressed sellers and people that really need to sell, and it's going to end up being a bloodbath. That's what we were all expecting. But hey, none of that actually happened. And the reason it didn't happen is some of the things I mentioned earlier on, because the government started stimulating the market, there was more money available, demand started rising, and it's completely different from what we thought it was going to look like maybe a year and a half ago. And of course the stamp duty holiday, as I said, has been a key part, I believe, in terms of pushing the market and initially getting it moving, but then it was dropped in 2 stages. So there was £500,000 stamp duty holiday, meaning that if you're purchasing a property up to £500,000, there's no stamp duty paid. That's quite a big saving, but of course prices rose so quickly, it meant that that benefit that you would have had, that was also lost as well. But then it was gradually reduced down to 250,000, and that 250,000 stamp duty holiday has now also come to an end at the end of June. So what does this ultimately mean? Well, this could be the beginning of starting to see a slowdown in the marketplace. We've already started to see in some places, actually in September, house prices for the first time over the last few months are now starting to fall. So we've seen a very slight drop in house prices. And of course, inflation is on the rise. So it's been 3% in August, and we can see it heading towards 4% before the end of the year. So things are becoming much more expensive to buy. And if you're involved in the property trade at at all right now. You're trying to get projects and renovations done. You're starting to see challenges around getting hold of materials. Material prices are starting to go up significantly. And all of this is created by the challenges around the supply chain in terms of being able to get things out to the market, to people. And of course, recently the issues with the lack of lorry drivers. All this has a compounded effect in terms of stock being available for general renovation and the prices going up for things, which ultimately also starts having a knock-on effect. Hey, stop. I'm interrupting your viewing pleasure because I have a question for you. And the question is, would you like to meet up? I'd love to meet up with you. The great news is we'll be restarting our property meet very soon. And if you want to be kept informed, make sure you subscribe to the channel. If you haven't already, hit that subscribe button and make sure you also enable the notification bell, and that way you'll get notified as and when these things are happening. Now let's get back to that video. Now, although we've seen a slight price drop in September, we also have to remember traditionally this also is a slower time of the year where people are maybe thinking of holidays and other things and not necessarily thinking about buying property. So the market is often slower in terms of purchases and transactions happening during September. But of course, we've also just coming out of a peak in terms of prices, so the price at the highest point as well. And some people thinking, hey, maybe now it's a little bit too much. It's much more than I was thinking it was going to be. And for ourselves, in terms of investors buying property to develop or properties that we buy to keep, we've certainly been much more slower and less active than we have been, say, last year in terms of doing deals, simply because the price has been too high and there's not been as many deals as we would have done ordinarily. Personally, I believe house prices are really going to start slowing down right now. I don't believe they're going to fall off the edge of a cliff. I don't think we're going to have that crash that people were talking about previously. However, I think that slowdown is going to be impactful and also it will create opportunities at the same time. And the reason I think it will slow down is because ultimately prices and demand are driven by affordability. So people have to be able to afford to be able to buy property even if they've got a desire to buy. I remember 2006, 2007, 8, around that time when there's a huge crash in the market and there were so many cheap properties available and there was a huge desire for people to want to buy, because I was sourcing properties at that time, I was selling deals on to other people. But what I found was there might have been an appetite to buy, but actually the affordability, the lending wasn't necessarily there to support them. Right now there might be lending available, but people are really stretching themselves in their affordability, and lenders are now much more stricter than they were, say, 10 years ago in terms of providing mortgages as well. They're much more stringent in what they do, in the checks they do before they will provide the finance in the first place. So when we look at these things, we think, actually, can people afford and keep continuing to afford to buy? And London has always been a unique market, and London prices haven't really been the same as the rest of the country. Although we've seen these price rises over the last few months, it hasn't necessarily been happening the same in London, because what happens in London will impact us, because gradually we start seeing a trickle effect that happens. So I'd like to keep a close eye on the London market, even though we're nowhere near London in terms of what we do and the investing we do, but it's important to keep an eye on it in terms of what's happening there. When we look at these things in a holistic view, really there's so many moving parts that could affect the market, and we've seen that over the last year, with one lever being pulled by the government in terms of, say, 95% mortgages or interest rates being lower, or lenders pulling products from the market as they did earlier in 2021. When we start seeing these things, you see how much of a big impact a small lever can have in the marketplace. So really none of us have a crystal ball, but what we can do is use our experience and our best guesstimates in what we think is going to happen in the market. And right now I think more opportunities are going to start to exist, but I think those opportunities are going to be different to the ones that maybe existed last year or even the year before. Going forward, what we'll be focusing on is really more value add, where we're taking on properties where we can add significant value, we can improve them, we can repurpose them, we can change its use. That's what we're interested in. We can build out the ground, we can create properties where they don't exist, because that's where I think the true opportunities are going to exist for the next year and 2 years, and as the market starts to recover and build. Right now, buying a standard property and using it as a buy to let, yes, it can work, but it's really not going to produce you the best returns that you can. You can make your money work much harder by buying the right type of deals. And at the same time, we're looking to start opening up our sourcing business as well, again, for other people. We've been sourcing for many years. I regularly get messages where people asking, hey, can you source property? Do you source property? You say, yes, we do source property, but we only source them for ourselves. We don't actually source for other people. We haven't done for quite a few years. However, because we see now an opportunity appearing in the market, there's going to be more deals available, we'll be starting to source for others. If that's something interesting, make sure you ping us a message so we can keep you informed as and when we start to do that. You know, I believe we're at that key point in the marketplace right now where we're really going to start seeing the fallout and the impact of what's been happening over the last year and a half or so. People have been sitting at home. It's been a very different time. We've never really experienced this in our lifetime before. And as we start coming out of this and people start getting back to work, and are people even going to, some of people even going to have a job to go back factor as furlough starts coming to an end. You know, costs are rising, inflation is rising really quickly, gas and electricity prices are supposed to go through the roof over the coming months. You know, when we think about all these things, we don't really know how that's going to impact people's lives just yet. So I think we're at that key point where things are going to start to change and we're going to start seeing what happens. But as I said, as property investors, there's always opportunities around. They're just not always the same ones that we traditionally look for. And I think it's important that we keep our eyes peeled on what's working quite well, what strategies really work. And remember, I talk about using the right strategy in the right location at the right time of the market. So hoping you find this useful. What I'd really like to know is what your thoughts are, what you think is going to happen in the market. And if you'd like to view the last video I did in terms of my assessment of the market, we'll put that up here for you to watch. But just before you do that, make sure you click on my face just down here to subscribe to the channel, and look forward to seeing you on this video up here.